Good morning, traders. Thank God it is Friday, Friday the 4th of April, and we are ready again for another flow show in your company. We see that yesterday, among other visitors, we had the Antarctica trade representative having a meeting with Trump and Vance. I think they are actually threatened to march on the Capitol as well if Trump doesn't drop tariffs on the penguin community. That for the musings of this Friday. We need to keep things light sometimes, have a bit of fun, have a bit of humor, because otherwise we are just going to hang ourselves a bit too quickly. Right, let's go over to what has happened. And again, good morning, everybody. So first of all, the reactions against the tariffs. Obviously, everybody is reacting in different ways, depending on the block or the geographical location. We've heard, for instance, to start with the softer part of it, that the UK is very much trying to negotiate to reduce the tariffs a little bit, but they still say as well that they haven't been hit that hard, and that thanks to some people saying thanks to Brexit, they haven't been hit that hard as Europe. We will see what comes out of it, but in the meantime, Trump already said that they did not hit the UK too hard, so there's a bit of hope there, although we cannot see it in the rates that we see on the sterling so far. There is a lot going on in the interest rate sphere overnight and this morning, and that is creating a lot of those moves. But I will come to that a bit later. On the tougher line, and we are going to stay in Europe there. It's especially the Europeans that have been going very hard, pushing back against the tariffs that Trump is slapping onto Europe, calling it all sorts of names. The Germans are reacting very hard. They are trying to put some measures in place as well. The French as well, Spanish, well, all of them at least. The Italians are a little less bellicose against those tariffs. They are rather wanting to sit around the negotiation table. But the European Union, and we will see whether they come to an agreement or not, but the European Union seems to ready a plan to hit the US with counter tariffs sector by sector, but they also said that they are not excluding or not stopping at really the goods trade, but are also looking at what is happening on the digital front. They could increase taxes and uh, maybe revise all the accesses also that the financial services have. So that is one to follow closely. Now the question is here, as I've already been talking about, there's still a lot of moving parts in this debate or in the tariff rounds, is that whether Europe is trying to get the US around the table from their end right now, or also if they are going to agree, because we know that Europe very often has difficulties to come to a general agreement on paper that's signed by everybody. So we still need to see what's going to happen there. They've put two kind of deadlines on it. One is around the 15th of April, the other one is around the end of April. So that still leaves a bit of time to get around that negotiation table with the US to see if there can be something done. But at least from the European side, compared to the UK, compared to, for instance, Mexico as well, it's going much more hardline than what some actually may have expected. Speaking about Mexico, Scheinbaum and Ebrard were very vocal yesterday, and actually they were pretty positive, let's say. because taking the USMCA agreement at hand, they were saying and that people would have to respect those USMCA agreements to try and shift goods or car parts, etc., through Mexico, but they would do it in line with all the agreed terms of this USMCA versus the US as well. They also, Scheinbaum also said that she thinks that Mexico has had a preferential treatment compared to others. So she's quite positive there. Ebrard is also planning to go visit to have a visit at the White House or in Washington D.C., but the date has not yet been set, and they're still waiting for a first call after the tariffs have been put in place. So that is for the tariff side. Now, from the U.S. side of things, Trump was saying that if other countries act, I forgot the exact term that he used, but act mega nice towards them, there could be something done on the tariffs. And he was at the same time talking about the tariffs against China, saying that there may be a possibility for those tariffs to be reduced if they would come to an agreement on TikTok. And that deadline for TikTok is tomorrow. So there is, well, let's say in US terms, about 36 or so hours left to find an agreement. Several US companies have already said that they would be willing to put a bid in onto TikTok, but it does look like the US administration is going to want to do it their own way. But at least we've seen pretty big reaction overnight in the Chinese yuan. Has to be said that China is closed, so there wasn't really much flows coming out of China itself. But the Chinese yuan has recovered quite a bit from the lows that it saw right after the tariff announcement. Um, Let me see, and I'm straight away going to reply to Himashu-san. Let me see if I can find that link again for the NFP competition. Indeed, it is today. Here we go. Let me find it back. Copy link. There we go. It's going to go up in the chat room right now. There you go, Himashu. That is for the NFP competition. And speaking about this, we know that we also always have like great prizes there. So there is no time to waste to put in your votes, and the winners will be contacted by us sometime after the competition closes, maybe later tonight or tomorrow morning, also over the weekend. Right, let's see what there has been said more. Yeah, so furthermore on the tariff side, Japan then. There's been a bit of talk both ways on Japan. They are trying to set up for a call with Trump, potentially even having a US summit, and that before the 9th of April, where those tariffs will come into play. That is a short notice. I'm not sure whether they can put a US-Japan summit together in 4 days' time or so, but at least this is the plan from Japan. And Ishiba, and that is the other side of the medal. Ishida was actually in the last intervention that he had, actually no later than a few minutes ago. He said that he wishes to set up a tariff response HQ soon, but that will depend on whether he has a call with Trump and or whether they can have this US-Japan summit. So that is a story to be followed closely as well. For the rest, on the German side, then again, Baerbock, he said that they are on the path to spend more than 3% on defense, and that is trying to be a bit soft towards Trump as well, but it was also hinted at the Ukraine-Russia situation, where Russia has been pounding Ukraine again with rockets overnight, and he was saying that Putin is trying to play time, raising new demands all the time, and the Germany clearly not happy about how Russia is handling that situation. On that geopolitical front, still, we also have those NATO meetings ongoing, and they have been saying that it is that the continued US commitment to NATO and the strong transatlantic alliance remains the bedrock of the security. So that is again trying to keep the US on the side of NATO. We know that Trump has been threatening to leave NATO at some stage, but NATO's Rutte is firmly asking the US to stick with NATO. That from that side. Now over to central banks. We had a couple of Federal Reserve central bankers out yesterday. Jefferson was out saying that he is in no hurry to adjust the rates. There is time to see what happens on different fronts, whether it is growth or indeed inflation. And Cook said as well that amid high uncertainty surrounding what is happening right now, it is time to watch the incoming data to make decisions later. And then I'm straight away going to jump on what is going to happen later after the NFP today. The US jobs report is out later, as we know, also with the Canadian job report. But here, this one, 16:25 is UK time, so that is probably 11:25 Eastern time, if I'm not mistaken. We will hear from Fed Chair Powell, and that I think could be a market mover. We've been chatting about this intervention by Powell later on today in our room, and as usual, we are not 100% out of what he may say, so there's a good few variations possible. One of them is that he continues to walk his fine line or both sides of the aisle without crossing any orange orange or red lines there. That is very, very possible because the tariff announcement is still very, very fresh. Too early, probably, to say something, but there is two sides to the coin, as we know. Inflation expectations have been ramped up. They're coming back down, by the way, a little bit over the past 12 or so hours. But there is the inflation side, but then there is also the growth side. So the market is really divided with what the Fed may be looking at first. My personal view, I think in situations like this, inflation is never will be a bad inflation, and I still think that any central bank would hate to have to raise rates due to bad inflation. But there is a possibility that he talks about the risk that those tariffs will have on global and more in particular US growth in the short term. If he would ever talk about their concerns surrounding growth in the US, surrounding the jobs market in the US, that may be one that he goes off script or changes the script a little bit, and that would be clearly stating where their focus of attention is right now. So this is going to be, whatever happens, an interesting one. Obviously, as I said, we will have the jobs report before, but it is going to be a very interesting intervention by Fed Chair Trump, in my opinion, today. Sticking to the central banks and UEDA, and well, expectedly, we can expect that is now a bit more cautious on how those tariffs will impact. He said it's a bit too early to see what the real impact is. They are obviously hoping that Ishiba and the trade representatives of Japan will manage to get a bit of a softening of all those tariffs towards Japan. We recall yesterday the trade commerce officials said that they see no rationale behind the U.S. tariffs on Japan. So we will see what Ishiba and the trade representatives can pull out of the bag, and that is also at which point UEDA stands now. I do think that for the time being, uh, there is this uncertainty surrounding what the Bank of Japan may do. I would have thought that all things equal, being a new fiscal year, there may be a bit of a hike in interest rates again. But if there is a failure on trade negotiations, we may be in for a bit of a longer pause because obviously everything comes at a cost. We also know that the Bank of Japan is independent, but also only to a certain point. Okay, we know that the Japanese government. We've been talking about it very often here on our shows. We know that the Japanese government is having to fund huge packages, also big budgets, and that the Bank of Japan is for sure keeping an eye and keeping a close contact with the Ministry of Finance and with the Japanese government, so not to derail the the country's finances, or at least not too much. Right, that is no. There's one more. OPEC plus, OPEC plus, and that was a big mover yesterday for the oils as well. Oil were already coming back down a little bit because of the uncertainty surrounding the first impact of the tariffs. We had the spike while I was off, and then yesterday it was already coming off a little bit. But then the OPEC plus came out with a small bombshell there, saying that the hikes that they will see in May are actually higher. The output hikes are actually higher than what was planned or rumored before the meeting, because there was a possibility that those hikes would not be as big, but actually they are now bigger than the planned hikes. So oils really got hit pretty hard. I will look at them today as well, because we really saw a big move there. Right, over to what happened on the data front quickly. So we saw the here the final numbers of the, well, yeah, first of all, but that was during phase. I mean, nothing special out of the jobless claims there in the US. Trade balance, don't look at it now, look at it in the future. It will get more and more important. Obviously, with all those tariffs in place, we will see how those trade balances evolve. Um, that set of data is going to have increasingly importance in what the market may react to when you trade the dollar and other currencies, obviously against the US dollars. So we had the final composite PMI and the services PMI, but then especially the ISM, and there that was not a great one at all. Not only, well, okay, the PMI, the services PMI, came out still just above the 50 line. So we are still, generally speaking, in expansion, but it was a pretty big setback, and especially on the employment side of things, where we had a rebound last month. The employment side of things really got a bit crushed, and that's where the market is going to focus. Put its attention to, especially also because we had the challengers layoffs finally showing the Doge people getting laid off. The employment is something that the market will focus on, especially services, which is a big chunk of the economy. This is not a great number, and here prices come down, but they still remain uncomfortably high. But this is not a great picture all in all. Okay, I mean, high prices, low low employment data. The new orders just holding the 50 mark, but threatening to come below. These numbers may be even worse come the next month. Now we know a little bit more about the tariffs, unless, as I always say, since there are so many moving parts, unless everything gets reversed or watered down, and then we may see a bigger or a better hold somewhere. But I expect those numbers to remain pretty sluggish. Especially the employment side of things is going to be important. Over the course of the day or the night, I would say we had the Swiss employment rate. Nothing special around there. Nothing special there. Household spending in Japan slightly better, a bit better. It is, we saw that big setback for the month of January, and that was likely due to the setback after the year-end bonus spending in Japan. Okay, so it's kind of logic that we see a little bit of a better number, but this is an okay number for the Bank of Japan, because we know that the Bank of Japan is watching very carefully how the households are holding up in this round of rate hikes. Okay. Then we saw the Swedish CPI coming out weaker than expected. Um, that may have caused a bit of a move today, but I think also the risk. Okay, yesterday we saw a big setback. We know that Norwegian kroner, we know that Swedish kroner have benefited a lot in the latest weeks, but they are now starting to give back some, and actually a fair bit of those gains. These are data that are not going to help the Swedish kroner, especially if we see more risk of moves over the next sessions or so. So I would be a bit careful with people who have been riding the long stocky train for now. It's been a good trade. It's been a very good trade. Perhaps not completely done, especially if we see an unwind of potential tariffs. The stocky could still do well, but these kind of data, and I would say that, like, watch risk, because it's the Swedish krona is a risk currency. It's also a euro accelerator. It's an accelerated euro, and so if the euro comes down like we're seeing today, the Swedish krona could be a bit fragile as well. Then we had some factory orders and industrial production, but they have not really moved the needle too much. Bit of a mixed bag here. Germany factory orders flat, where they were expected to bounce 3.5%. French IP a little bit better, but still nowhere near like big rebounds. Then we had those construction PMIs, barring the Italian, still under the 50 mark. And then there's one here, the UK construction PMI this morning, and this is giving a false impression, because it's better than last time, and but everything is in the prices. And if you read, for those who are in our chat room, you will see what I've written about it. But I also written about it on X, and the rest, barring the price pressures, is pretty bad. Actually, it's weak because we saw the sharpest pace of job decline since October 2020. Output levels fall for the third month in a row, and we are also looking at the lowest business optimism since October. So this is not really a great report, and it has contributed to the sterling being a bit under the cosh as well today. Looking ahead, the jobs report. And again, the same question comes back. Are we going to see the impact of those the government payrolls, but are we also going to see the impact of what we have seen in the ISM and other PMIs, where we have like weaker employment data? Are we finally going to see it, or do we still have to wait until we really get the impact of tariffs, the impact on potentially lower spending in companies that will actually be negative for jobs, or and that would be the surprise trade. We always have to look at the surprise trade, or are those tariffs that Trump and his administration slapped on Asia, and I'm especially thinking about Taiwan, Vietnam, Indonesia, etc., who are producers for US companies from different sides, whether it is on digital, whether it is on clothes or whatever manufacturing. Asia is a big manufacturer and producer for US companies. Or are we going to see over time the opposite effect, that the US companies are repatriating jobs to the US? So these are the questions that we are asking now. I personally think that the first leg of the impact of tariffs all remaining the same is going to be quite negative for the whole employment picture right now. Okay, but are we going to see this month? I don't know. I mean, we've been trying to plan it out, but it's all it's not very obvious to find out when we are really going to see the impact. But don't be surprised if we are seeing an impact on this kind of number, okay? And we also have a double whammy, and that is for the Canadian job market. It's been the last one was a little weaker, especially on the full employment change versus the part-time employment change. But for the time being, no big dramas yet on the Canadian jobs market. So this is also, and especially in the light of those tariffs as well, is also going to be one to closely follow, because the Canadian dollar has been relatively volatile as well over the past weeks, and especially after the tariff announcement. So that's it. Then we are waiting for Powell, what he has to comment on, and I am sure that there's going to be some comments from, if not Trump himself, some of the US officials as well, especially if this report would hold up right now. That's it. And let's look at what happened overnight, and especially in our early time zone, because we are wondering what's happened there. Or, well, people are wondering what's happened there. And I always say, like, if you don't know what happened, look at the differentials, okay? So we had this big move on the tariffs where we had a narrowing of the interest rate differentials. So this is inverted, right? This is European minus the 2-year dollar rates, which are the closest to what expectations may be for potentially central bank action, or immediate expectations on data, or on politics, or geopolitics also. So we've seen this narrowing and taking the euro dollar up to 111, and then this morning, all of a sudden, we saw a big drop, a widening again in favor of the dollar. And if you look at the euro dollar and you overlay this one, which I always pleased to do, let me just see if I can find it here. Just look at this. Let's go over a little shorter time frame. Let's go over to a little shorter time frame. And if you overlay, or if you put one next to the other, I always like to keep them one next to the other, because it's a bit clearer than an overlay, which could get a little bit messy. But if you look at the moves here, and you look at the move in the differentials, you look at the move in the euro dollar, don't look any further. What's happened overnight and what's happened early this morning is that the market is also taking away some of the potential inflationary pressures also, but they are worried about growth now, about global growth. And I've been saying that yesterday as well. I think there is a real concern right now, in the short term at least, for as long as we don't know any more than the fact that the tariffs have been slapped on, there is a concern about growth. And we find it back. First of all, we had the leg in the US in the immediate aftermath in the immediate aftermath of the tariffs, slap on what the market said, like, oh, this is really not good for the US because of the supply chain and all the worries that there may be on job market, et cetera, and on growth in general. So this was the first move, but then now the market turned around and said, like, well, hang on a bit, because there is worries elsewhere as well. And also, as I've been saying, we still don't know whether Europe is really going to get their act together. So as a result of all this, we're now seeing those interest rate differentials widen, and also perhaps the pure risk trade coming back a little bit. We see the euro crosses remain very high despite the lower euro dollar. We're seeing the Swiss still one of the best currencies out there. We're seeing the rest of the risk pairs coming down as well. Like okay, dollar yen is rebounding just a little bit because we also see the Japanese 10-year yields having a sharp drop, as you can see here. But we've seen like this nearly perfect risk play. But who says risk play somewhere in the back of the mind may also say, well, hang on a little bit, because sometimes we buy dollars as well when there is risk off. And all of this melting pot is what we are seeing right now. And also, and then I'm going to move on now to FX markets. Oh, by the way, no, I have to stay one more because we see the effect on the euro here, but we also saw this on sterling versus euro. Okay, so we are seeing since end of March, beginning of April here, we are also seeing a reduction, because this time it's sterling minus EU. Okay, also a reduction in the differentials between the sterling and the euro, and that is somewhere explaining what's happening in the euro sterling right now. Seeing a little bit of a recovery right as we are on the show, and as a matter of fact, euro sterling comes down a little bit from the highs as well. But yeah, a lot is going on in the interest rate differential sphere, which is driven by inflation, which is driven by growth expectations. So whenever you see moves on currencies or crosses also, always have a quick look at what the differentials are doing, because they are really driving a lot of this. And I'm going to put up one example here, a big example of what happened there, two actually, because both the commodity currencies, well, first of all, on this Aussie dollar, there's a couple of things happening there. So first of all, we had this reaction on the Aussie dollar because China got slapped tariffs upon, and people were wondering. Then we had a big recovery on the Aussie dollar because the dollar was getting absolutely slaughtered, and the CNY CNH did not continue to weaken further. But then we had this big slap here, and that I think has like a couple of reasons. So first of all, we see copper coming back down. Aussie is a commodity currency, okay? We see risk continuing to come back down. We see equity markets getting hammered. Aussie is a risk currency, okay? Thirdly, there's been and and I don't know exactly what reasons there are, but I think it has to do with growth potential and with perhaps inflation and data in Australia. There has been a big setback in expectations for the RBA to hold rates, meaning the market is now expecting more cuts than what was true until yesterday. And therefore, and then lastly, we had this technical reason. Remember yesterday when I said like, okay, we can get up to 63.80, but watch out. For me, we have to break above this 64 figure 15 to really continue to go. And what happened? Failure on the top end of the triangle, and a big setback, bigger probably than anyone would have thought. And maybe the market was a bit optimistic on the Aussie because the dollar was getting sold off. But the setback here is pretty massive. Okay, and now we are already below the the triangle support here, and we are already below those two prior lows. So this, to me, Aussie is really a bit dangerous. For as long as we keep below 62.30, 62.50, I would say, always need a couple of levels. I never like to have like just one level to tell me where to bank on. Just same as here. As I said, we could go to 63.80, but we have to break above 64, figure 15. Well, the same thing here now. We need to get back above 62.30, which would be uh, the negativity taking out. But then if you move back above 62.50, then we will have the potential to go a little bit more neutral and probably back into this box here. But for as long as we are below here, this looking a little bit fragile, you know. I think we could go and have a visit at mid 61s or so before the week is over, providing we don't have, of course, a disastrous NFP report. Yeah, and its cousin finally followed suit. But look, we have a technical, the technicals here. We could actually put it there, in which case we have never been there. But even if you look at it here, we still have like 1, 2, 3 points. We went really to tag it. This is still a potential bear flag, okay? To tag it, and now we are back down here to test the support of said flag or said little channel that it was trading in if you ignore the longer term, if you're just a short-term trader. So we have now the same situation here. 56.70, sorry, would look very fragile for the Kiwi, in my opinion, especially as well that it's fragile on the rest of the crosses too. It's fragile on the Kiwi yen. It's fragile versus euro. And so I mean I think there is a bit of a risk there that and speaking about risk, I mean risk is getting hammered a little bit again. Um, there is a risk here that we are going to test and perhaps break. It could get down to 50-60 figure today. Okay, this is the potential, right? If we get back above 57, get back to more neutral, get back above 57.20, and the Kiwi will look a lot better, okay? But as this looks now, and as the Aussie looks as well, this is looking fragile, all right? To me, this is looking a bit fragile. Now, Euro. So we had this big setback on the interest rate differentials. So we have the setback on the euro dollar as well. We had a first level here, 109.90. That is, we were, we're still not far away because this thing is volatile as well now, where the euro is usually a currency pair with the biggest volume. It's usually a little less volatile than other pairs maybe, but now this is also pretty volatile. And with the NFP coming, with the Powell upcoming, with a continuous uncertainty still around what tariffs may be going forward, and with the interest rate differentials being quite volatile themselves as well, this could be a bit volatile. So I would say, like for the end of towards the end of the week, have a look at where we are, whether we are above 109.90, call it 110, or whether we are going to test for this 109.40.55. In which case, if we have a close below, that could look a little bit dangerous as well. And that could have several reasons for getting down there. Well, first of all, market too short dollars straight away. Secondly, is Europe getting its act together? Well, if they don't, that may be another reason to be there. If there is more risk priced in on European growth, that may be another reason. But there is a chance here. There is a chance that we are going to have a revisit of that 109, mid 109, call it 109.40.55. That's the one thing. And then look where we close the week to make a decision on where we can be starting next week. There may be a lot of drivers, as I said. I mean, not in the least politic drivers as well, but I think a close below 109.40 or above 110 may be significant enough to get into next week, if you see what I mean. Sterling, well, what I must say, and that I feel kind of lucky, fortunate that I haven't traded it so far. At least not trade the reset here, because I was kind of thinking that we would hold this little zone here, That is between 130.40 and 130.65.75. I thought the setbacks would hold and get back up, but this morning, with what I showed you on the interest rate differentials coming back a bit more into the dollar favor, this really has come down. The construction report hasn't helped. Risk hasn't helped because, in a way, um, sterling is also a risk currency, as we know. So we haven't held the one call it 129.95 up to 130.40, really, that zone. So we haven't really held it. We went for a walk below. Looks a bit stop loss ish to me right now, and I wouldn't be surprised if we get back above there. Watch for any potential positive news also on the tariffs, or any rebound in risk may spur a move back above there. But if we close below 130, 129.90 today, there is a possibility that we are going to get back much lower, 120, well, much lower. I'm saying much lower. In current context, it may not be as much, but look as much. But 129, the figure, 128.65.70 is going to be very, very, very important to me. Okay. If we close above that 130 and a half, here I've got this trend line, but I don't particularly like it. But if we close, I'm even going to take it out, you know. If you close above 130 figure 40, that's going to be looking a lot more positive in my opinion, okay? There's a lot to happen still today, so this is going to be um, relatively interesting as well. Euro sterling, I'm pleased to think it's all to do with risk right now. We have gone to the 61.8 of the last the big decline that we saw since August last year. Tag the 61.8. It's also around the prior high here. So that's an interesting level where we stopped at today. We need to get back below, I would say 83.35 for a starter. 25.35, get below there, but especially below 84 to call this a failed move and we go back down. In the meantime, oh, here you go. Okay, thank you, Joao. While we are on the flow show, China's announcing an extra 34% tariffs on US goods from April the 10th. And they add 16 US entities to export control list, also saying that they announce restrictions on some rare earths related item. And that's a pretty important one, those rare earths, as we know, because it is needed for a lot of those new technologies across the board, from EVs to AI and whatever there is on the new electrics and electronics and the new industry, let's call it that way. So, well, let's then go and have a look at what happened on the dollar yuan. And the dollar yuan was pretty funny. As I said, we had this big move on the tariffs, and then came right back down. I think on the possibility of getting a TikTok deal. And now we are moving back up a little bit. Let me go on to a more, narrower picture to see what happens. This is what we just heard here, the announcement. I think the pivot of current moves lies not too far from here, around 728, 728 and a half. Get back above, we could have a look back at 730.31. If this move stalls here, we could actually get back lower. And watch out, because here we have weakened risk as well. Obviously, we have this tariff risk right now, but watch out, because we have weakened risk with this TikTok deal coming through, yes or no, okay? So we could have a bit of a gap open come Monday again, especially as well that the Chinese market was closed today. We didn't have a Chinese fixing, etc., etc. So watch out here what's happening. We are moving towards that 728 and a half. Could be that a move through could see a bit of an acceleration, okay? We also have the Canadian jobs report, obviously. And I'm going to stop there because it's already been a long meeting again. Unless there is you want to see your usual metals, we are hanging around, which what I would call in the very short term neutral around here. Okay, we had a move below, tag the next support level here on dollar Canada. We are back at 141.5. I would call that relatively neutral from where we are now. So my my view is after the Canadian jobs report, it could be a mover, but my view is since we don't really know what's going to happen with the tariffs yet, that double whammy that we can see on the Canadian and US job report is probably going to be a bit of a mover this afternoon. Obviously, power later as well. But I would be in the global context with all those tariffs and the USMCA and whatever, I would be kind of surprised if we break either side of 142.35, maybe 142.65.75, and on the downside, call it 140.30.50. Okay, I think we are going to potentially trade inside that, maybe even visit both ends of this range. But can we close outside? Can we take a fresh direction on the dollar Canada right here and now? I have my doubts. So that is my view on the Canadian dollar, on the job report, and what Powell may have to say. Gold, as I said yesterday, we bounced from those prior highs, and we are more in a bit of a more neutral situation right here. But I would say, in the global scheme of things, still extremely big. Okay, we need to close below 30.55 there is to continue to go lower. All right. If we see a move back above, and yes, yesterday we had this move, but if we need a close, I think we need a close back above 31.10.15 for a confirmation to go to get back above. But I will still continue to say that 31.55 up to 3200 is a very big zone in my opinion. So for as long as it's kept up there, I would say respect it. Okay, respect it. Yesterday, the market saw a bit of a drop from there. It's going to take something. I think something, or continuation of bad news or so, or the market continue to crash away to get through it, especially the 3200. I think it is a really, really big, it's got a very big target on its back. Okay, so please respect that 3200. That's what I have to say. All right, and then trade inside those levels. It seems that it's hard to put real takes on there right now in the short in the intraday, but respect those levels and maybe you can trade off them if you want to trade off them. But I would say like the big one is here 31.55, 3200, and here 30.55, and then you're talking about 3000 if we get back below there and hold there. I think then we're talking about much closer to 3000. Okay, and with that, my friends, I hope I have prepared you well for the day. Be careful. Things are on the move. A lot is moving around. And be careful with what Powell can come up with as well. He may be a bit of a mover later on today. Thank you for being with us on the Flow Show every day, and we will talk again on Monday. Have a great weekend, everybody.